Government debt to gross domestic product in Kenya averaged 54% from 1998 until 2017, reaching an all-time high of 78.3% in the year 2000 and a record low of 38.2% in 2012. However, an increase in capital expenditure on a number of projects has seen debt levels jump to 5.4 trillion shillings, which has raised concerns over its repayment. This has pushed Kenya's debt to GDP to 56%.
We need to bring our debt and deficit levels down, and that will mean we'll be borrowing less. And also borrowing in our own domestic currency again will help us address the exchange rate.
The debt is a combination of both external and internal borrowing, with analysts blaming the government for crowding out private borrowers in the domestic market. This is reflected by the fact that government securities registered a growth of 8% year-on-year last year, as opposed to typical loans that grew by 2.2%. The situation has been further exacerbated by returns on government bonds and bills, which averaged around 12%, while capping interest rates at 13.5%. Latest data from the Central Bank of Kenya indicates that domestic debt stands at 2.7 trillion shillings, while external debt sits pretty at 2.71 trillion shillings. However, external debt is expected to spike later this month, with Kenya expected to sign another commercial loan with the Chinese lenders for the extension of the standard gauge railway line from Naivasha to Kisumu. O'Brien Kiman for Business Defined.